All right. Welcome to Investment Banking Insights. This is the only show dedicated to helping you learn both the technical and non-technical aspects of the investment banking process. My name is Alex Mason. I'm your host, and a little bit of a late night recording for you here, recording at just after 12:30 in the morning Central Time here in Chicago. And this is an audio-only episode, just getting the new studio almost up and running. I'm sitting in it right now, but it's like not quite ready for prime time, but very soon. But I wanted to talk to you today about some news in the markets, some things that I've been following lately. And I mean, been pretty busy with like personal stuff, but I still definitely read what's going on, and some things in the investment banking world I found interesting. One of them is that Moelis Company's founder and CEO, Ken Moelis, he recently announced that he is stepping down as CEO and is still going to be involved in the company, but is transitioning out. So for those of you who don't know, Moelis Company, it's one of these elite boutiques, one of the firms on the street that has grown into a pretty big independent advisory firm. A lot of my classmates from Cornell end up going there to work as bankers. It's Ken Moelis. He started this firm back in 2007, took it public in 2014. So it's actually a relatively new investment bank, but has grown enormously based on a lot of really big, really interesting deals that they've been able to do. Like advising the Phoenix Suns and like other sports teams, and just a lot of really interesting deal work that they've done. But he's stepping down, and so, if you're recruiting for Moelis, thinking about working there, just something to know, and also just to think about when any large organization is undergoing a major transition in leadership, that's when it's a good idea to really take stock of the culture and look at who's going to be running things now. So in this case with Moelis, basically his right-hand man who helped him found the firm, a man by the name of Naveed Mahmood Zadigin, who runs the technology practice at Moelis, he is now going to be CEO. And the way it was framed in the Wall Street Journal article that I read about it was that Ken Moelis said that Naveed is going to be a great CEO by being a great banker, which tells you a lot, I think, about the culture of the firm and kind of how they see things. So that was kind of interesting to me, just in terms of like, every firm has a different culture. Every firm has their own processes. And so so they're very focused on like deals, like doing deals. So that was something in the news that I thought you might want to know about if you weren't already aware, especially if you're thinking about recruiting for Moelis Company. Another thing, which is definitely the bigger news, I think, in the banking world at large, not just with investment banking, Wells Fargo, the $2 trillion asset cap that the bank has had on it is now gone, officially gone. Regulators have finally kind of set Wells Fargo free. And just as like a super quick recap, if you don't know kind of the background of the situation, way back in, I think it was 2016 or so, Wells Fargo had this major scandal, and the prior leadership of the company was kind of pushing the creation of fake accounts for customers, because managers and other Wells Fargo employees were incentivized based on the number of accounts that each customer had. So customers would find out that, like, yeah, you're banking with Wells Fargo, maybe you have a checking account with them, maybe a savings account, but they would have all these other accounts that were supposedly in their name. And they're like, wait a minute, I never opened these accounts. So this major breach of trust with the general public and with the government and regulators that went down about a decade ago. And Wells Fargo has paid heavily for it, and like paid literally hundreds of millions plus in fines. And I would say the total economic impact has been in the billions in terms of lost revenue for Wells Fargo. So in terms of the bulge bracket banks, of course, you got JP Morgan, you got Bank of America, you got Citibank, and you got Wells Fargo. Those are the major US bulge brackets, the big four. Wells Fargo has definitely been the smallest of those four, and kind of because of this crisis, right? Because of this issue. And so Wells Fargo has been trying to repair itself for several years now, but they haven't been able to grow because if you recall the economics of how banks work, it's all about leverage. You need assets on the balance sheet. You need to be giving those loans out, increase your loan book so that you can then charge more interest, so that you can increase your interest income and fees, which is the main source of revenue for a bank, especially a bulge bracket. You need that interest income. So the government basically said, you need to cap your assets at $1.95 trillion, and you cannot go above that. So imagine running a business or working in a business where the government literally says you cannot grow past this dollar amount. Like that's really hard. But now the CEO, what's his name? I think it's Charlie Schaefer. He was brought in 2019, a former protege of Jamie Dimon, who is the CEO, longtime CEO of JP Morgan Chase. He was a protege of him, and he joined Wells Fargo. And so for the past 6 years, he has been directing this repair effort, basically, of the firm. And regulators have finally said, okay, you can now grow past $2 trillion in assets. And so this is like major news for Wells Fargo. They can now compete more directly with the other larger bulge brackets. So just for context in terms of size, Wells Fargo is just about 2 trillion assets now, right? With this announcement, they've been artificially held at that level. Citigroup is the next biggest. They're about 2.4, 2.5 or so trillion in assets. Then you got Bank of America, about somewhere between 3 and 3.5 trillion in assets. And then JP Morgan Chase, which has 4 trillion in assets, literally double the amount that Wells Fargo has. So that's kind of the landscape in terms of the large bulge bracket banks and the assets they have on the books. So what I'm interested to see is, does Wells Fargo take this opportunity? Are they going to execute well and level the playing field a little bit more, so to speak, in terms of the business they bring in, both broadly speaking, but also just the specific advisory businesses that they have? Because remember, bulge brackets, when it comes to investment banking, they have balance sheets to lend money. So they can not only make money advising on a deal, but also sweeten that deal by providing the financing. Like, they don't have to have a relationship with other lenders per se. They are the lender. So they can kind of come in and do package deals for a lot of these companies, which is pretty attractive for especially large firms, like very large businesses that need a lot of capital to do big deals. That's why you see a lot of the large bulge brackets still getting a lot of that business, because they can tap their loan facilities and also have their advisory services. So anyway, interesting thing going on with Wells Fargo, and also thought the Ken Moelis thing was kind of interesting, so I thought I'd share that. But hope you're doing well. About to go on vacation, but returning soon, and more episodes in the works. Hope you're doing amazing, having a great summer. I'll talk to you soon. Bye.